Hello, everyone, and welcome to our webinar, SPACs in Space, a new investment frontier. I'm Jeff Faust, a senior staff writer at Space News, and I'm the master of ceremonies for the next hour plus here as we discuss what is an interesting time, to say the very least, in the space commercialization field. We are approaching what you could say is an inflection point in this field for several reasons. One is the advances in technology, such as low-cost launch and small satellites that are enabling new business models, new business techniques. We are also seeing from the investment side a surge in these special purpose acquisition companies that are providing a new means for companies to go public outside of the traditional initial public offering or IPO route. And now we're seeing a convergence of those two in the space industry, with a number of companies having announced plans to move with SPACs, allowing them to go public, raise hundreds of millions of dollars, and provide exits for investors. So what we're going to do for the next hour and 15 minutes is discuss that with a panel of experts, including a number of CEOs of companies that are merging with SPACs, who can provide a firsthand perspective of what they are doing and why they are doing it. We're going to start, though, first with an expert discussion between Chris Quilty of Quilty Analytics and Guillermo Sanline of New Vista Acquisition Corporation. These are two experts in the industry who are very familiar with what's going on and been following the industry for a long time. So I'm going to turn it over right now to Chris and Guillermo, provide a little bit of an overview of the topic before we go to our roundtable discussion. Chris and Guillermo.
Thanks, Jeff. I appreciate the intro. And if I can, let me actually start with what's perhaps a shameless plug. For those of you that are newer to the space industry, we just published a short little industry primer. It covers some of those topics like low-cost launch and flat panel antennas that you may need to bone up on. That's just posted on the quiltyanalytics.com website. You can just download it for free. With that, wanted to jump over and throw a question to you, Guillermo. Space industry is hot, a lot of exciting things happening, but it hasn't always been that way. In fact, I think back in, 2006, when you founded Space Angels, maybe there were about 5 or 10 companies that were startups. And so I guess the question was, what were you thinking back then?
Yeah, it's funny sitting here in 2021 and looking back at 2006. I think next month will be the 15-year anniversary of launching Space Angels Network. And looking back at 15 years retrospectively and seeing everything that had to happen to get here, that's a fair question. What the heck were we thinking back then? Because given where we were back then, launching an angel investor group focused specifically on space, at best it was visionary, at worst it was crazy. But I think back then it seemed like a logical step, right? We had just had the internet boom. So we'd kind of witnessed the transformative power of what I call the troika of disruption: entrepreneurs, technologists, and early stage investors. And in the space side, we started already getting a sampling of what was to come, because by then everyone talks about Elon starting SpaceX and Jeff Bezos starting Blue Origin and Richard Branson starting Galactic. But back then in 2002, 3, 4, 5, we had a whole host of small entrepreneurial space ventures that were just getting going, whether it was Armadillo or Bigelow or Maston or Xcore. We had a lot of great little companies that were getting going back then. So it seemed like we had this troika of disruption happening in the space industry. We had entrepreneurs, we had technologists, we were just missing the early stage investors. So it seemed like a natural play to start this angel investor network focused on early stage space companies. Now, granted, in retrospect, it took a long time for everything to take off, but at the time it seemed like a no-brainer. But let me flip that over to you, because I know you also made a transition in the space world. So what was going on when you made your transition over?
Yeah, again, I wish I could say I was visionary back in the early 2000s. I was primarily a defense analyst, and post 9/11, by the mid 2000s, basically every single small cap defense company had been acquired. So to stay gainfully employed, I had to think about what I could do and what was interesting. And I looked over at the space industry, which was an adjacency to what I had been doing with a lot of my military companies, and there seemed to be something interesting going on there. Certainly didn't have the vision of where we would be today. And it was also interesting as an analyst, there was nobody else writing on the industry. Now, maybe that should have been a clue since nobody else seemed to be interested. But sure enough, it happened very slowly. And then all of a sudden, that a number of companies started to come back public. And then really like a whirlwind in 2015 was kind of the turning point. It had been building with SpaceX and others before then. But in 2015, there was more capital invested in the space industry than the prior decade and a half combined. And it's only gone up from there. We've seen an environment where on average, there were about 10 startup companies a year to now it's north of 100, more pushing up towards 200 startup companies a year. And that has really created an environment where we're at today, where the industry is now seeing a lot more public company, a lot more capital, a lot more interest. But importantly, I think there's been a lot of technology changes that have led to where we are.
Can I actually interrupt you for a sec? Because I know a lot of folks use this term new space, but I know at Quilty, you guys use a different framework, right? You've got your space 1.0, 2.0, and 3.0, which I think was also fascinating. Could you maybe talk through that a little bit?
Yeah, so just as a framework for tracking the industry, if you think about when space finally, hit the map and became something, it was back in the 1960s and 70s. And that entire era was driven by government spending and macro geopolitical aims. Once those aims were met, boots on the moon, space faded into the background. And it really didn't come back again until the 1990s. And that was a time period when the primary driver for growth was not venture capital. It wasn't startup companies. It wasn't the government. It was really corporate driven. So you had companies like Motorola backing Iridium, and you had Lockheed and Alcatel and others all building major constellations. That era ended abruptly again, circa 2000, as investment capital left the equity markets. And really, the industry went into a quiet period again for another decade plus until the current phase that we're in now, which we would call Space 3.0.
So that quiet period is exactly when we had started Space Angels Network, and it turns out we were a little bit too early, and there was a quiet period until things started up again. So a lot of things changed in those 10 years or so, or over the 15 years since we started Space Angels Network. So I'm curious. I know I lived through it, but your job was to research it and follow it and quantify it and report on it. What changes have you seen over these last 15 years that kind of got us from having to launch an early angel investor network focused on early stage ventures to where we are today, literally today, having this webinar on SPACs and companies going public?
Yeah, it would be nice if there was a single event or a single technology you could point to. There isn't really. It's been a confluence of things that have happened: technological, regulatory, structural to the industry, geopolitical. If you force me to name a top three, I would start off with launch. It's self-obvious, but if you can't launch stuff, there is no space industry. And give credit to SpaceX. They really, when they came into the market, they shook it up. They've moved to the forefront in terms of launch cadence and launch costs and new technology. And that was a huge barrier. I mean, for the small sat industry, which is a huge part of the growth of this industry today, there were companies that would build a small satellite and couldn't get it onto orbit for years. And it was humongously expensive. So I would put launch as number one, and I think we'll have some discussions around launch later in the presentation here. Number two, you mentioned it, it's this term new space, which for those of you that aren't familiar, it became very popular 5 or 10 years ago. And what it really reflects is a way of thinking more than necessarily a technology. And it's the idea that rather than doing things the traditional way, using radiation hardened hardware and doing long engineering studies, it's more of a software centric approach to building things quickly, cheaply, testing it, launching it again. And using the tools that are available today, electronics, off-the-shelf electronics, existing software for developing hardware. And that approach has really moved the industry forward. And if I had to pick a third, I almost hate to say this, but the government. Certainly here in the US, and we're seeing it in the EU, and we're seeing new space agencies starting up, the government has actually provided a pretty meaningful helping hand. I'll point to NASA. They started the commercial cargo program, which is what put SpaceX on the map, that turned into commercial crew. And many of you probably don't even know it, but there's a program called CLIPS, the Commercial Lunar Payload Program, where NASA's just paying a fixed price for companies to deliver a payload to the moon. And that's creating a whole new architecture around that part of the industry that, heretofore was something I just remember as a kid watching Space 1999. It's exciting stuff. So I probably took the three best ones, but if I were to throw back at you, Guillermo, what to you was the most meaningful change?
Well, I'm glad that you said these three, because I do agree with those three. But for me, if I kind of take a step back and take a higher level view of everything, I think the 15 years we're talking about are part of a larger paradigm shift. I think if I put your Space 2.0 and Space 3.0 together, right, it's basically 25, 30 years of humanity transitioning from government space programs to kind of a global private economy. And I think, as with any major disruptive change, sometimes it takes a full generation to get through that change. And I think even if we just look at the 15 years, when I made that announcement in May of 2006, announcing Space Angels Network, there were kids graduating from college. In the United States, they'd be 22 years old, which means today they're 37 years old, right? So these kids went from, over the 15 years, went from being recent college grads to essentially being decision makers wherever they are today, whether in venture capital firms and banks and companies, universities, government agencies. So these are people who have spent their entire professional careers within what we call new space or space 2.0, 3.0, or maybe that interim in between. But basically with this paradigm shift, as you were talking about, this mentality that private companies can do space. It's not just government. And I think that's part of what's driving all of these different changes. So I think that's the biggest thing that I've seen over the last 15 plus years.
So I guess if you're one of those younger generation people and this is all you've known, there's a lot to be excited about. But for somebody that bears some battle scars, what gets you excited either about 2021 or looking in the near-term future here?
Well, I think what gets me excited, even if we look at today, right, this webinar about SPACs, which means that there's these the four panelists that we've got who are about to take their companies, or in AST's case, took their company public today, right? These are space ventures, innovative space ventures, who are accessing the public markets, right? So bookending that from where I started 15 years ago with Space Angels Network, where we were just trying to get individual accredited investors to write $25,000 checks to get these companies going, all the way out to accessing the public markets. What gets me excited is that now space entrepreneurs who are starting their ventures today have access to the full spectrum of finance vehicles that entrepreneurs in other industries have had for years, right? And so now I'm excited just to figure out to see what everyone's going to come up with over the next 5-10 years, now that they have access to all of the financing options that they could possibly have. So I don't know, but right back at you. Like, what do you think?
Yeah. So as a guy who's a analyst and writes about the industry and companies in the industry, the fact that we have new public companies coming out and more to write about, that's exciting stuff. And actually, it's a pretty good lead in, since we're running out of time here, to probably pass back over to Jeff Faust and to Jason Rainbow, and we can hear some of those stories of companies coming public.
Hey, thanks, Chris. Thanks, Guillermo. It's great to go down. It's great to go down. Sorry about the echo here. Great to go down the little path there from struggling to raise small amounts of money to, the large public markets here. I'm going to turn things over to my colleague, Jason Rainbow. He's a senior staff writer at Space News as well. He is going to moderate a panel where we're going to talk with several of the CEOs and some others that are involved with this field. Normally, when we put together these panels, we have people struggling to get on board and sometimes dropping out at the last minute. We actually managed to add another CEO to this panel. So I'm going to turn it over to Jason, who's going to do the intros for this newly expanded panel, who will be able to talk in more detail about the SPAC process and the various advantages and potential disadvantages of the process. So Jason, over to you.
Thank you, Jeff. And hello, everyone. It's great to be here moderating this incredibly timely panel with space companies at various stages of the SPAC process, including one that started trading on the public market today. So thank you all for carving out some of your time to help us understand just what's going on and where this leads to for the space industry. Joining me today, we have Abel Avalan, Chairman and CEO of AST Space Mobile, which is building a space-based cellular broadband network. And they are the company that has just started trading on the NASDAQ. We have 4 others that are working to get to the public markets. Brian O'Toole, CEO of Black Sky, which provides geospatial intelligence, imagery, and data analytics. Peter Platzer, CEO of Spire, a global data and analytics company that uses satellites to forecast the weather and also tracks activity in maritime, aviation, and other sectors. And then we have Chris Kemp, CEO of satellite launch company Astra, which is preparing for its first commercial payload flight this summer. And Peter Beck, CEO of launch company Rocket Lab, which recently deployed its 100th satellite. And last but not least, we are delighted to have Tess Hatch, who is a partner at venture capital firm Bessemer Venture Partners, which is invested in Spire and Rocket Lab. And those 2 companies managed to announce their SPAC plans on the same day last month. So lots going on. Hello, everyone. We have a really packed panel and lots to get through. But before we start our discussion, let's just go around the virtual table. And I'd like to ask each of you just to say a few words on how this SPAC trend is transforming your specific business. And Abel, let's start with you. What does this funding mean for your company and your plans for deploying your constellation?
Yeah, I mean, the SPAC was a fantastic vehicle for us to get to market on a timely fashion. And as Chris and Guillermo pointed out earlier, this is a new way for not only billionaires and governments to participate and bring space to the public and to share that opportunity with the public in general. So I think it's a great thing. It's a great thing for space, and it's a great thing for the ecosystem.
Great. Do you have any words of advice for the others on this panel that are going down their own SPAC deal at the moment?
Well, I mean, the most important at the end, and they are super experienced and they have great companies behind them. So it is, the most important at the end is the business and making a difference. And they're certainly doing that, and they have fantastic opportunities with them. And it's great for us to see other new entrants into space to be part of our club now.
Great stuff. Now, Brian, Black Sky is a little different because you're out of the development stage and you're already generating revenues. How does your SPAC deal help accelerate your plans?
Yeah, hi, Jason. Good to see you again, and it's great to be here. Yeah, we're a little bit, this happened to come at a really ideal time for us, as we've been at this for a while. We've got a mature constellation that's growing by the day, and a software platform that's delivering real-time geospatial intelligence to customers around the world as we speak. And we were really starting to get into our growth phase. So the SPAC transaction really fully funds us to accelerate both in the government sector and the commercial sector. I would say that over the long haul, we see a real opportunity in real-time geospatial intelligence commercially. and this really enables us to accelerate those plans to go after that larger market opportunity. I'll say in general, to be a fully funded space company is significant. Both from that customer perspective, they know that you're funded, you have the capital that's going to be there for the capabilities that they want and are counting on, and then from the market perspective, we've got the capital to move quickly toward what we think is a very large market opportunity to meet the growing demand for real-time geo.
Mm-hmm. Peter of Spire, is that pretty much the same case for you?
Yeah, so Spire has been on the road for becoming a public company for a year and a half or so. We sell to large corporations, we sell to governments. We have a business that has been growing for a number of years, and those entities just prefer to interact with a public company. It gives them more trust, more data to lean on. And so it has been on our path, and we evaluated, direct listings. We evaluated going public in the traditional process. And the SPAC process came along as another option. And through the partnership with Bob and Jack from our partner, became just the right option for us at the right point in time, given that we were on this track for a number of months already.
And Chris, what can you say from a launch provider perspective? This is, of course, a part of the space market that is notorious for its heavy CapEx requirements to get a launch business up and running.
Yeah, that's right. We started Astra with a mission to improve life on Earth from space, largely by helping these hundreds of companies now, including a few very large mega constellations, launch a new generation of space services to create a more healthy and connected planet. It's incredibly capital intensive when you have a mission of daily space delivery, which in our case involves rocket factories that involve the production of hundreds of rockets. As we execute our mission, we now have the capital to fully fund that business plan. So with the SPAC and the capital that we've been able to raise alongside the transaction, we have all the capital we need to build the spaceports, the factories, and fund the entire business plan to have a launch a day and to build the space platform that'll help enable all these new companies to accomplish their missions. I'll also note that our SPAC was actually brought together by Craig McCaw and Bill Gates, who, if many of you recall, together tried to launch Teledesic back in the late 90s. And so they know exactly what it feels like to not be able to get a mega constellation into space because of a rocket that never flew ultimately. And they'd raised over $1 billion in the late 90s. And fundamentally, there are a lot of folks that have been working on this for decades. And I do think with all of the companies, and there's some great companies that have great products that will now have the capital that they need to build the satellites and the constellations and the services that could really improve everything here on Earth.
And Peter of Rocket Lab, of course, has been busy launching rockets for a good while now. Why have you gone down the SPAC route?
Yeah, so for us, we're also traveling down a path of a traditional IPO, and if you look at kind of our history and our trajectory, which is certainly through this public process has become a lot more clear. Typically, Rocket Lab as a company, we've always just done it and then talked about it. So this is a new kind of beginning for us, where we actually talk about things that are in development. But for us, it was really an acceleration of really the trajectory that we were already following down. And I think to echo some of my colleagues' comments, I think the space industry has always suffered from the kind of scale of capital investment that's really required to do some of the things that we'd all kind of dreamed and hoped for. And I think a public vehicle like this is a great way to bring the capital into these programs. But the flip side to that is ensuring that the companies are certainly high quality, and I think definitely we have a mixture of kind of quality of assets through the not just within the SPAC, the space industry, but within the whole SPAC community. And I think using a SPAC as kind of a last ditch effort of a funding round is dangerous, rather than particularly being focused on being a public company, because that is that everybody knows that's no joke.
Great. And Tess, as we heard earlier, SPACs aren't exactly a new investment tool, but is it fair to say that we're entering uncharted waters now in the VC world as it relates to space? How are SPACs changing your market and investments there?
Well, SPACs are just another way for companies to go public, but particularly at an earlier stage in their development. So in many ways, SPACs are just like an IPO, but with a big structural difference. In the case of a SPAC, the SPAC can share long-term projections with the institutional buyers. And this is particularly suitable for companies with ambitions or development of very important technology that in 5 years from now may generate $1 billion in sales. And relating SPACs specifically to space, it makes them a really good fit because it unlocks public pools of capital. At the end of 2020, Virgin Galactic was one of the few public space companies people could purchase. And by the end of this year, there will be many more commercial space companies for the public to invest in. And relating it to VC investment specifically, I look forward to the next wave of space startups embarking down the path that Spire and Rocket Lab and all of the others on this call have paved. And I look forward to investing and partnering in those companies.
Great. Okay, thank you. So I see a lot of similarities there. My takeaway is SPACs are a vehicle that enables you to raise a significant chunk of money all in one go relatively quickly. And that means you can just get on with developing or expanding your business without being preoccupied by having incremental funding rounds, which has generally been the way companies like yours have been doing things since Bessemer and other VC firms kind of flocked to this industry. So do we have any thoughts on why now? What is happening in the space market to make this suddenly a viable environment for so many public companies? Tess, maybe you can give us a top-down view.
Why now for space companies? Well, I don't think SPACs are unique to just space companies. I think they're why now for a handful of deep tech companies. And I now think they're expanding to other types of companies, SaaS, consumer, cyber, et cetera, that we're seeing in the market. There are 25 SPACs announcing a week. There is over 80 billion of capital that are currently sitting in trusts for SPACs or that are listed and waiting to find a company to merge with and de-SPAC. I think you said it really well, Jason. It's a new way, rather than every year and a half or 2 years going back to a venture capitalist and raising another round, really beefing up your balance sheet, having a lot of dry powder to execute your plan and have a valuation at a forward projected multiple. Looking forward to what the other, thank you, Peter.
Yeah, I really want to echo what Tess says here, that this is not something particular to the space industry. If you look about what has been happening in the public markets over the last 20 years, the size of companies going public on the NASDAQ has increased by about 2 orders of magnitude. I mean, Andreessen himself took a company public with less than $50 million in revenue on the NASDAQ, and that has just gone away. And so the value creation from 1 billion to 10 billion in market cap accrued exclusively to private investors like Tess and her partners or private equity companies. And I think what SPAC is creating an opportunity now is for the public investors to start participating in this value creation from 1 billion to 10 billion again, which is substantially more often happening than the value creation from 10 billion to 100 billion and beyond. And the public investor has been locked out of that value creation of like 1 billion to 10 billion and was left with the far less often happening and taking far longer time value creation of 10 billion to 100 billion. And I think that's what the product provides into the marketplace. And space companies, like many other companies, are just one of them that take advantage of this pathway. At the end of the day, you're becoming a public company, and either you have a business or you don't have a business, right? I mean, I think if you look at the companies on this panel, they are building, real businesses, real companies that provide a real service with real revenues and real customers. And I think that's the only thing that at the end of the day matters.
So does it speak perhaps to the maturation of new space is becoming an outdated term, but these agile space companies that are finding new ways to build satellites and access the orbital environment? Does it perhaps speak to an industry evolution in general terms?
Yeah, of course. I mean, like you see, the companies here, like Rocket Lab, like Black Sky. I mean, those are companies like Spire. They have a real business. They have been building this for almost a decade. In Peter's case, for longer than a decade, right? So yeah, absolutely. I mean, this industry has been building in terms of companies generating revenue for a decade, and it has been kicked off with the creation of the CubeSat standard over 2 decades ago. So it depends on what you call new, in terms of a new space. I mean, the underlying technology is here, has been at a while. And if you look at my hairstyle, and Peter's looks still a little bit better, but you should have seen him 5 years ago. He had about twice as much hair, right? So yes, we have been at this for a while. And so we have customers, and we have been thinking about, bringing this to the public market and the credibility that this brings to us as serving our customers. And this is just one way of doing it that, happens to make sense for those of us that sit on this panel and might make not sense for others.
Yeah.
I think to jump in, I think about the last 24 months for our industry here. And it went from a lot of work over the last 7 to 10 years to now reliably demonstrating agile space as a sector where companies are now working together. We're demonstrating the ability to get things on orbit, get them working quickly, delivering data at a global scale to a global customer base. That's all really come together very significantly in the last 24 months to the point where there's customers and a path toward addressing real market demand. So I think the timing is really ideal with respect to where the industry is right now and what the SPAC market is bringing to us in this sector to accelerate our growth for what has been a lot of work over, as Peter said, 10 years to get here.
Okay, and so this is a question for anyone who can find a way to tackle it and address it. But before you found your SPAC, how many calls were you fielding from potential sponsors? What can you say about the activity that's happening behind the scenes right now, and what that says about what's still to come in the industry maybe this year? Peter, you and Peter, well, both Peters. I think the most recent SPAC announcement on this panel. But Peter Beck, do you have any thoughts to share?
Yeah, I mean, so as what I mentioned before, our initial trajectory was a traditional IPO. So for a long time there, we just sort of, said thanks very much. This is not the right time for us. And until we started to take a couple of calls. And for us, we've always been very strategic in the investors that we've brought on within, into Rocket Lab. Right from day one, raising out of tier 1 firms. And if you look at kind of our cap table, it's full of tier 1s and strategics, and we've always been incredibly fussy with the investors we've brought on board to Rocket Lab. And my view has always been, if you hire a bunch of rubbish engineers, you have a rubbish product. If you hire a bunch of rubbish investors, you have a rubbish company. So we've always been very, very fussy. And that was kind of, we doubled down on that for sure with looking, when we started, taking calls from various SPAC partners. And, just like SPAC companies, I would say, SPAC partners, there's a wide spectrum of quality there as well. For us, it wasn't an overnight process. Sometimes these things come together very quickly. We worked with our particular SPAC partner, Vector, for 3 months. So we did 3 months of due diligence on each other. And we really wanted to make sure that this was the dance partner that we really, really wanted. And, we were kind of, fire hosed with inbound. I think once the word gets out that you're talking to one SPAC partner, there seems to be a big red phone somewhere that links everybody else up. But we were certainly fire hosed with a lot of inbound. And like I say, I think choosing your SPAC partner is a very important element. We're in this for the long haul. And in our case, it was really bringing a partner with had deep operational experience, especially in M&A, which is a large thesis of ours, but also real operators that had a team that could support the things that we were looking to do. But I think it'd be interesting to hear from perhaps somebody who's a little bit more recent even than us, because as to the kind of I guess vigor in the SPAC community is if it's declining or if it's still really really agile.
Yeah, Jason, let me add here, if I may. After going through the process of selecting the partner to go to the SPAC, raising the pipe, de-SPACing, and now today trading as a public company. So we're not SPAC anymore, we're a regular public company. That was born as a SPAC. I think not all SPACs are created equal, and I think you need to go back to the fundamentals of who are in the pipe, what investors are long term, who is really who really invested from the beginning, who reinvesting, who is part of the company going forward, and that's for me this new vehicle that at some point got a little bit crowded with too many companies wanted to go through an SPAC. It all filters out by the fundamentals of the company, the partners, who is in the pipe, how much money they're raising, and back to the fundamentals of the business plan. So I think it's a vehicle that really it is changing space, a new space, or the name that Chris used it, in a very profound way. Now you have 4, 5, 6 new public companies or companies that are going to become public in a space, creating real things, rockets, constellations. In our case, a very large service for cellular in partnership with the cellular operators. So something that it will evolve and it will continue to be evolved. But at the end of the day, it's all back with the company. It's nothing to do with if it's an SPAC or IPO or a direct listing or a private raising.
Abel, what happens to those companies that miss the SPAC window of opportunity? Do they become acquisition targets for companies like yourselves?
I don't know. I mean, I really focus in executing. I mean, again, for us, this was a financial event and a way to get a public currency to take the company where we wanted to take it. There was an incredible amount of liquidity created through this vehicle. How long that will last, I don't know. In our case, we went through that, and we're listed, and we're executing. So we're fully funded to executing our plan.
Yeah.
How the market will continue to embrace additional companies, I mean, only the market will tell. That would be very difficult to predict.
Okay.
Jason,
sorry, go ahead.
acquisition is definitely an option for companies who potentially missed the SPAC window that had ambitions to do so. But you can also imagine all of the companies this year that would have been raising Series B, C, Ds, their next growth round that SPAC'd instead, they're off the market now for private venture capitalists. So I'm sure raising a growth round or a larger round will be a little bit easier for those companies.
Okay, very cool. Chris, there are a lot of rumors of deals happening under the radar, but so what's the common linkage between the companies that are going down the SPAC path and where does it not make sense for a company then to go through a SPAC process?
Is that directed at me or Chris Quilty?
Yes. Sorry, Chris. Chris Quilty is not on this panel, unfortunately.
Yeah, no, I think that, from our perspective, we were also in the process of raising a large private round, and we actually had the team working on that, approached by a number of SPACs, and we decided to take the process into our own hands, and instead of have a bunch of SPACs come to us, we ran a quick process, and we identified about a dozen of the SPACs that were roughly of the appropriate size, that had the right focus, that had teams that we would want to partner with. And to be honest with you, we had a 1-week process. We did back-to-back meetings with the SPACs, and we had a half a dozen term sheets come back the following Monday. And at that point, one of them really stood out, and it was the one led by Craig McCaw. And we were fortunate to be able to agree on terms with them, because I thought they were obviously, in terms of partners, folks that really understood what we were doing because they had personal experience with it. And so I guess we got lucky. I also want to echo everyone on this call has a real business. You don't do this unless there is something that you can produce of value. I look at Peter Beck, the work that he's done, and I met him many years ago. He has real customers that really benefit from their spacecraft being in space. So I look at a lot of the companies that, back in the 2000s and these other, there were a lot of companies that were not real businesses, that did not have real customers, that did not create real value. They were trying to create some sort of, exit for shareholders. These are businesses that are using the capital from these SPAC transactions to fund incredibly capital intensive yet incredibly important businesses in all cases. And so, I think that if we do see the market continue to support investments in technology companies, we will see a number of companies that will make a huge impact on Earth and our ability to manage and connect and improve things here on Earth, because every single one of these companies and every single one of their customers is working really hard to do something really important. And if we all get through this and we have the capital to do it, it's great for our country, and it's great for, hopefully all the shareholders that are involved in the businesses as well.
Okay. Chris, let me ask you this. How do you balance kind of speed to market with expanding in a controlled and measured way? Because becoming a public company, you're going to be tied to a lot of regulatory demands that don't quite exist in the private world. Is that a concern? I gather as a space company, you're already quite used to regulations, but is this a different kind of strain for a company?
I think that if you look at what this will give everyone on the call, it'll give them an opportunity to bring in people from other industries. We've recruited folks, for example, Benjamin Lee on Apple for 23 years. We would not have been able to attract talent like that if we didn't have the opportunity to capitalize our business plan. And I think that the talent that all of us will be able to bring in from other industries that have the experience to scale and the experience. Our CFO has taken 2 companies public, for example, and the opportunity to take your company public and to have the access to the capital to build the teams and fund the investments allows all of us to bring people in that have experience from other industries, whether it's other manufacturing, other aerospace, and I think that will strengthen the fabric of this industry at a time where we all have the opportunity to expand and address some global broadband service, being able to observe the planet in every conceivable spectrum to improve our ability to manage our resources. These are real things. And if we can bring in people because we have access to the capital to help us all scale our businesses and continue to build great products, everybody wins here.
Yeah. Yeah, and just there's so much capital in general because there seems to be a huge appetite for risk in the space industry right now, just generally, and not just in space. Does anyone on the panel have any thoughts on the pitfalls that investors should be on the lookout for as space companies just race to seize this new funding opportunity? Any kind of cautionary tales or anything along those lines? Maybe Abel, it's easier for you.
Well, I mean, maybe Tessa probably don't agree with me, but I think this is a great competition for the standard venture capital. I mean, space by the same nature and for how it started as a government-sponsored business. You needed to be a government. You needed to be United States or Russia or China to be in space. Then it migrated to where private companies start, and now this new breed of companies that I can get and participate into space. But private equity really, it got very comfortable, sponsoring software-like businesses or things that are non-manufacturable or that you can touch and feel, like a car, an airplane, a satellite, a submarine, things that you built. And I mean, they got very comfortable because obviously that went very well for them for many decades. So that has created the opportunity of people that are building real things, very, very hard things that are capital intensive, like satellites, in our case, to provide cellular connectivity to billions of people. This new kind of capital and access to public market capital is a game change. You don't build a rocket or a constellation of satellites, few tens of a million at the time. That is simply not possible, and not to do it in a timely fashion where you don't get out of pace with technology. So you have to put hundreds of millions of dollars to these things, billions in some cases. And the venture capital community, they had the appetite for that. A lot of companies were kind of trying to do it with SVRs and a small chunk of government support. That will not cut it either. So now having access to this quantum of capital to build real things in years and not decades, it is a complete change, and that change is good. That change will not be good for everybody, and at the end, as I said at the beginning, it all depends on the business that is being funded, and the size of the opportunity that is being funded. But I love it that it's competition for the venture capitals, that they stick, by and large, they stick to a formula of financing certain type of company with certain profile, and space wasn't part of that. And this opened up a floodgate of opportunities, and what you see companies from new space becoming public.
I can see Tess itching to weigh in there on the investor exuberance topic.
Absolutely.
Go ahead, Tess.
Thanks, Jason. Of course, when investing in any company or any stock, you want to consider a handful of factors. You want to look at the top line, the revenue growth and efficiency of that growth. You want to look at the competitive landscape. You want to look at the quality of the team. When it comes to space companies, there are nuances that you also want to factor into your consideration. And I'm going to use two examples: launch vehicles and satellites. When it comes to launch vehicles, you want to look at the number of launches and the number of successful satellites that rocket is deployed into space. And I'll use an example that I know well. In the course of Rocket Lab's life, it has launched 19 times, deploying over 100 satellites in space. It was the second most frequently US launch vehicle last year. The second example is satellites. You want to look at how many assets are in orbit and what sensors those satellites have. Another example I know well: Spire operates the largest general purpose CubeSat constellation. we have over 80 lemurs, CubeSats in space with various sensors for maritime, aviation, and weather monitoring and predicting. So usually those two things also correlate back to top line revenue growth, efficiency, et cetera. So as an investor looking at the ecosystem and investing as a venture capitalist in private companies, but the public in all of the folks on this call eventually available to public investors, you want to factor all of these things into your consideration and which stocks to purchase.
Very well put. Is there anyone else who wants to kind of weigh into this? I know this is an important topic for many investors out there, just trying to make sense of it all. And it does seem to be a rush to go to the public markets. Anyone else want to add anything?
Yeah, I will also add to what Tessa said, which makes sense to me, is the size of the addressable market. What is the opportunity? Because if you're going to be on the public, you don't want to do it on a market that is relatively small. You want some opportunity that is large enough where you can capture, even if you capture a very tiny percentage of it, you will be participating in a very, very large opportunity. So I think it's the combination of the three things and the willingness to disrupt and do things differently and big to participate in big and large opportunities, which space, either you do it a little bit by a little bit, and a lot of companies unfortunately get in treadmills, been doing the same thing for a long time, or you do it for some quantum leaps, and really use space as a new way to create a new economy, and really participate in opportunities that hopefully over time generate billions, participate in trillions of dollars of opportunities. So I think it's a combination of what the company is, how big the opportunity is. It is worth it to invest on that technology for the long term. How big is the addressable market? Can that addressable market be captured? And then when you combine that with all the barrier of entries that space have, which is hard, it's tough. You don't do it with a bunch of kids in a closet and get a software company or an app company. You need scientists, you need engineers, you need a lot of experience, you need a lot of capital. So, but that at the same time is a barrier of entry that if you combine it with a very large addressable market, it's a big opportunity. And I think that's a new opportunity that new space companies will be able to capture.
Great. Chris.
Jason, if I could just jump in.
Yeah.
I think first off, space is still a high barrier to entry market. And to all the things that Tess pointed out, you need talent. On the technical side, you need capital, you need time. And I would say probably most of the others on the panel today, it's not just about satellites or rockets. It's about, like in our case, it's about the satellites, but it's also about a manufacturing capability and a supply chain. It's about a global software network and ground network that can take the data and turn it into actionable intelligence. It's being able to translate that into a business that is actually generating revenue. And so there's multiple dimensions to being a successful player in this space. It's just not about one aspect. And I think all of us have been through a lot, working through as much time and energy on all the other dimensions that are essential to have an operating business.
Chris, did you have something to add?
Yeah, I'll circle back around to as we entered this conversation, some credit where credit is due to SpaceX. The elephant not on the Zoom is the private company that's valued at almost $100 billion right now. It's probably one of the world's most valuable private companies because they're creating a product that people want. They're launching Starlink and it works. I've used it. It's great. I got one on order for my house. I think that if you can connect billions of people all over the world to the internet, that's not going to be a monopoly. There's going to be companies across the world in different countries that are going to create competitive constellations. We already know about many of them there is an absolute race for this, not just the folks on the call here, but for everyone in the ecosystem around us to develop phased array antennas, to develop propulsion, to develop satellite buses, to develop launch vehicles, because there will be competition to provide the kinds of capabilities that are coming in space. And whether it's next generation defense applications, whether it's point-to-point delivery, whether it's next generation GPS, weather, sensor technology, we're at the beginning of a new a whole new economy. And the companies here on the call are the ones going public today, but over the next decade, we'll see more companies, because there won't just be SpaceX. There won't just be only one. There will be many. And I think everybody has real numbers to talk about here. But I think the realest number is the number of Starlink satellites that are already on orbit providing a service that works today. And all of the opportunities that we have to go and help other companies compete with that, and to launch services that are complementary to that in a number of different domains.
At the risk, Jason, of showing my almost 10 years on Wall Street as an investment manager, at the end of the day, as an investor, when I invest, I put money in with the hope of getting a return on my capital, right? This is driven by an underlying business. And I don't think that anyone here on this panel is thinking about their own company any different, or like is thinking about it from the perspective of like, because I'm a space company, I don't have to put up a return. I just don't think that is true. I think all of us recognize that we're building a business that is providing value to customers, and if it provides value to customers, they will buy more, right? And if you think about what drives a stock price, there's only two ways how a stock price can go up, right? Either you have more revenue and your multiple stays the same, or you have a multiple expansion, like basically your multiple goes up because the quality of your revenue and your future cash flow increases, right? It's pretty simple, and it is no different for a space company than for any other company. Like either your revenue goes up and the quality of revenue stays the same, and that's how your stock price goes up because the multiple stays the same, or your revenue goes up a little bit or stays flat, but the quality of your revenue and your cash flow and your margins improve, well, then your multiple improves and your stock price goes up. So for all intents and purposes, for me as an investor, I look at companies not based on the industry, but I look based on the fundamentals of the business. Is that a business that has high margins? Is that a business that has high growth? Is that a business with a high quality revenue that I can predict out in the future and get comfortable with? Do they have margins, and do they have operational leverage improving their margins? If I see those things, then I like this business. Now everyone has to make their own investment decisions, but at the end of the day, I think any company is in the business of providing services to customers and to their investors, provide a return on capital, independent of the industry from which they're in.
Very good. Okay, it is interesting that this trend is playing out while we're still in the midst of a global pandemic that's continuing to disrupt supply chains and so on. Where have space companies been doing well under COVID, perhaps surprisingly well, and where are they still finding it challenging right now?
Maybe around the margins. There is some effect with space companies through the pandemic, and I would love to hear from the other panelists who are experiencing this daily. But from a investment standpoint, nothing really has changed in regards to our partnership with space companies and what we look for in space companies. We're looking for companies that are solving big problems with unique solutions, a great team, and early or proven sales growth. And I look forward to the finish line in sight, approaching quickly.
Peter at Rocket Lab, do you have any comments to make on just the operational challenges that you're perhaps currently facing, and maybe some thoughts on how quickly the industry could recover once the vaccines do their rounds.
Yeah, I mean, for us, we've remained largely untouched. We're so vertically integrated. Over 90% of everything we do is done in-house. So, it's not like we have very long and complex supply chains. So when you're so vertically integrated, I think you're shielded a lot from some of those impacts. Where we have seen some impacts is more on our customer side. So, the launch part of our business is very much driven by our customers' readiness. So as we see our customers, struggle with supply chain or those other kinds of things, then that probably has a biggest effect on our launch business. On our satellite business, we haven't really seen any appreciable change at all. In fact, almost an acceleration. I mean, we've been there's more and more projects, underway in our satellite division than ever before. So it's really haven't seen, too much of an influence in that respect. But there is a silver lining. I'm always a glass half full kind of guy. I mean, certainly from a public markets perspective, not having to go from hotel in a roadshow, it's been a very luxurious process to be able to do it all by Zoom. And I think that it saved a lot of time and a lot of hassle. So that's certainly been the plus side through this whole process in COVID.
Yeah, this seems to be working out pretty well so far. We had some technical issues before we started recording and going live, but so far so good. I don't know if I just jinxed that. Here's a question: Has COVID been helping to drive this SPAC trend in space at all, or has it been holding it back, or are they just kind of unrelated?
It's difficult to say, but that certainly. I will say the following: communications type of businesses, or anything that connects people by cellular, by wireless, by whatever technology, have become obviously more relevant, because it did remind everybody how important connectivity is and how important it is to get people connected. And I think there's no doubt that everybody understand and know that the largest opportunity for space is potentially connecting billions of people. So it became more relevant. It became more understood to people, or reminded people that this world doesn't move if people are not connected. Just imagine if we wouldn't have internet to have this call or to conduct daily business. And I found it fascinating how the world adapted and readapted. I mean, in our case, we raised almost $500 million, take the company public, launching our next satellite, all of that in the middle of the pandemic. So I mean, I think humans are great adapting. I mean, obviously, a very unfortunate situation, a lot of people's lives lost by this pandemic, but we adapted. And I don't think it hold back the space industry in any significant way. I think the benefit of reminding people that we have to be connected and the importance and the place that space has for that, I think it wasn't a bad thing.
Yeah, definitely a demand driver in terms of connectivity, for the space industry. But I'm wondering more about the investment vehicle itself, whether, because it's a relatively speedy process that kind of shields a company from market volatility. I was wondering if there's a connection there in the space world between why we're seeing so many SPACs now and COVID, or if it's just a coincidence. I don't know, Tess, if you have anything to say about that.
I touched on this a bit in the introduction, but I guess I'll repeat and dig into some things. I mean, SPACs are not new. They've always been around. They're just another way for companies to go public. And I actually, when listening to both Peters, both companies were in the traditional IPO process, and it takes longer than a SPAC. To your point, I mean, there's the speediness to it, and we were down that path, and we could have gone public faster via SPAC and find a really great partner to help us now as a publicly traded company. So I think those were factors. Relating it to the pandemic directly, I don't see a ton of links. We can dig in and I'm sure maybe others on the call have a link. But I think the speed in which the company can go public, the partner in which it can do that with, and the access to public pools of capital for these companies with real businesses is what's really exciting going public via SPAC. And I think they're here to stay. I look forward to in the future, there will still be companies that traditional IPO, direct listing, and now SPAC.
Okay, yeah, and speaking to that future, amid this rush of space companies going public, is the industry now entering a new era? How should we be thinking about new space companies, which is a term kind of synonymous with the rush of VC-funded ventures in this market? How should we be thinking about space in the years ahead with so many public companies around? Does it change the landscape at all?
I don't think so. I think maybe a very, very helpful analogy here is what happened when you move from mainframe computers to personal computers, right? You move from something large and unwieldy and custom built to something that was produced at a rapid pace, iterated very quickly, with an underlying exponential improvement curve. In the PC, we called it, Moore's law, right? And then you started networking those devices, and you called it the internet, right? And I think you see exactly the same kind of drivers, fundamental technology drivers now in the space industry, right? On one hand, you do have cost of launches of large numbers of satellites coming down. And on the other hand, you have a very stable exponential trend of capability per kilogram, right? So what you can do with a satellite of like 5, 10, or 20 kilograms is improving about 10x every 5 years, and has done so for the last 20 years. And that trend is unabated, very similar to how the Moore's law is unabated. So I want to echo what Chris said earlier, that what the companies will be doing of the future, started off by tests, and then maybe going to the public market. I don't think we have seen even the best of it yet, right? I don't think anyone, sorry, Brian, if I'm speaking out of turn here, and Abel. But I think the best companies that have the largest impact on humanity are still yet to be created by the incredible innovative and imagination of mankind. When you continually drive down the size that is needed to accomplish a particular task, like that capability per kilogram going up 10x every 5 years, that is an incredibly powerful force to unleash innovation, when at the same token, you have more and more opportunities to go up into orbit in large numbers.
Let me also comment on that. What I hope to see is a true space economy, not a niche play. Is the transition from niche to a mass market opportunity. That's what I really see that could happen with this new wave of both investment, innovation, and creation. I can see a world where every phone can be connected regardless of where you are, because of space. I can see people, being able to see their son in a soccer play in an app in their phone because of space. I can see an industry that is fueled by cheap access to space, timely access to space, by wonderful companies that I agree will not be one. There will be many that allow all these things to happen. So I believe in a very full transition from government, state sponsor, niche kind of play to a real new economy where space is just not a collateral, it is a big thing, and it's a central part for the economy.
Yeah, I think the ecosystem element of this is really important, right? Because I think to Peter's point is we could now rapidly evolve our space capabilities in a really capital efficient way that really hasn't been done before, with a vertically integrated either capabilities within the company or through a partner network, and that feeds on itself. Like in our case, we're really a software and data analytics company that happens to own some satellites, is the way I think about Black Sky. And obviously, as we can evolve and improve our space capabilities, we can deliver more faster and relevant information for customers in a lot of different industries. And there's a whole ecosystem behind that to make that happen a lot faster, more capital efficient, but ultimately delivering a lot of value to those that rely on that type of information for things that they do every day. So it's Jason, your broader question, I see there's just a large strength in the sector, because if you look at it, more of the ecosystem that's powering and more of a flywheel that's going to drive a lot of growth.
And just echoing, on what Peter from Spire said is, look, I think the industry we're in a maturing phase, and the industry is growing up, and it's important to remember, like, just a few years ago, there was only one private company that had ever put a satellite into orbit, and that was SpaceX. Then there was Rocket Lab, and then now there'll be others. Like, that was only less than a decade ago, that there was only one company. Now there's two. But and I think we're very, very much at an embryonic stage. And to Peter's previous point, I think this is just this maturing of the industry, and this is kind of the first phase of the maturing of the industry, or the new version of the industry. And there's going to be a lot of really, really exciting space companies, here in the future. And I think as the barriers of not only just launch, but the cost of building satellites and actually our model, of course, is to try and make it as simple as possible, where you don't even have to build your satellite, just come with your idea or your sensor. And I think you'll continue to see that kind of simplifying of the access to space. And to Abel's point is trying to make it easier and easier and easier to get assets and infrastructure in orbit, to really provide good services to Earth and build bigger businesses.
Great. And I'm mindful of time. I've got maybe two more questions, maybe a little bit left field questions to put to the panel. The first is, this SPAC trend also comes as the Chinese government outlines proposals to beef up its space industry and encourages more foreign investment there. Is there a geopolitical angle to all of this in terms of how the SPAC trend is helping to fuel and fortify US-based businesses on the world stage, perhaps? And maybe Abel, do you have any thoughts to share around that?
Yeah, I think it's no coincidence that we all in the seminar were American companies manufacturing in the US. And I tend to say every time that I talk to a senator or a congressperson, probably if we were in China, the government will be pumping a lot of money into us just because of what we're doing. In our case, democratizing connectivity, broadband connectivity on a global basis. That had a very profound impact in society, in influence for governments and many other things. Or cost-effective access to space, or particular census or business that allowed access to information that is very useful in space on the ground. So that's how the Chinese counterpart probably compete. They get that support from the government. What we have here in the United States is a fantastic capital market. We had a country and with a market with an appetite to fund new ideas. You know, as I said before, we're only venture capitals. Now, this way to do at this quantum of money, public company transaction that finance rockets, satellites, and other things. So I think, yes, this is a good thing for the US. It counterbalance all this spark of new companies starting in the Far East and put us a level, basically not with government funded money, but with public and private capital that is available in this country. So I think yes, it's a great thing. I think it's a great thing. Actually, was worried that if something like this did not happen, we as a country and our leadership for innovation in space, it will be controlled by very few people. With this, all of us now have the chance to really make a mark and make it big. And as I said, you don't do these things few $1 million at the time, neither $10 million at the time. You do it hundreds of millions of dollars at the time, $500 million at the time. And this is good. This is good for the US. Thanks for this. We had a 85,000 square feet facility in Midland. We have over a couple of hundred scientists, 50 PhDs, all of that because this capital's become available, innovation spark, and things happen. So yes, I think it's very good to balance out the lack of willingness of certain type of money or even government to really get into something that is completely disruptive, new, and innovative that requires a lot of capital. So I think it's a great thing.
Thank you, Abel. Yeah, that's an angle I don't often hear when we talk about SPACs. Another trend I'd just like to raise before we close, and it's an interesting trend that seems like it will bring a lot of changes for space companies, and that's the growing importance of ESG, or environmental, social, and corporate governance. This is something of a financial force that benefits companies that meet targets in these areas that are good for humanity. We're talking about real world financial benefits for companies that get a handle on, say, their environmental impact, and then are able to track that in a measured way. Seems to be an important trend for space to help monitor, analyze, and guide these cross-industry efforts. Peter Platzer, Brian, I guess this is really on your radar right now. How much should people be paying attention to this? Brian, you can start and I'll get to Peter.
Well, Jason, the Earth observation industry has always been a strong advocate during crises and humanitarian-related events to jump in and help where it's needed, right? And I think now where we're going into more rapid and high-frequency observation, combining it with other capabilities, such as what Peter's developing on the weather front, there's just a much more of an opportunity I see going forward around shining a light on things going around the world, being more responsive to emerging events that could lead to humanitarian crises. And I just think the opportunities there are just going to continue to come forward. I also think as you get into other forms of sustainable energy and monitoring that type of activity, there'll be opportunities as there as well. So I think we're in a great spot to really contribute to that movement, and it's really part of our DNA. Thank you.
Peter, any quick words to add?
Yeah, I mean, Adam Jones, I think from my understanding, said it very well, that space is going to be instrumental and unavoidable and absolutely crucial for us to manage, this century and the challenge that we face this century. Using and understanding the use of the resources of this planet in a responsible and a sustainable way is almost impossible to do without access from the ultimate vantage point space. Right? And so, for Spire in particular, but give just one example here, helping humanity adapt to climate change by making weather prediction, aspirationally as accurate as Swiss train schedules, right? If you look at the at the UN Sustainable Development Goals, if you look at the risk matrix from Davos, from the World Economic Forum, climate change sits in the top right-hand quadrant of massive impact and very, very high probability. You need to have data from space to predict the weather, with greater accuracy. And then you need data from space to help people where there have been bad incidents to recover from them. Be that understanding what bad things have happened, or to provide communication assets, into those areas where infrastructure has been knocked out. So I think space is absolutely crucial for humanity to adapt to the environmental and sustainable challenges of this century. Absolutely.
Great, fantastic stuff. And I hate to close just when I scratch the surface of this, but perhaps that's for another webinar. For now, thank you all very much for joining us today. I think this is a very important panel, given the role each of you are playing in how the space industry will be defined in the years to come. I'm going to hand the floor over now to Phil.
Excellent. Hopefully no echo as it transitions. So thank you, Jason, and thank you all the panelists. First, want to thank Space News and Quilty for organizing today's great event. It was a great opportunity to hear all the experts and get their insights, as well as all their experiences, reinforcing that it's truly an exciting time for the space industry and investing in the space industry. By way of introduction, I'm Phil Denning. I'm a partner at ICR. ICR is a strategic communications firm. We advise public and private companies on telling their stories to all their stakeholders, but with a particular focus on the capital markets. We've been very active in the SPAC process and the de-SPAC process, as well as the traditional go public processes as well. And we work with the management teams to help them tell their stories and be successful public companies. So exciting to hear that there's probably a lot more opportunities coming forward with all the amount of innovation in the industry and that ecosystem that is growing. So just a little bit about from a SPAC perspective, Tess mentioned, the SPAC vehicle has been around for a while, and it's just another way to access the capital markets, and it unlocks pools of public capital to help fund these great commercial space companies that we're learning about today and hearing about today. And looking back at Chris and Guillermo gave us a great historical view of the industry, outlining the growing demand for the access to public capital markets. And I think it was Chris Kemp that mentioned that there's a race to space that will create a whole new economy, and there are more companies and innovation that's to come in the space ecosystem. So excited to watch that continue to grow. And I think what that means is that there's a growing number of opportunities for investment as well, in addition to all the great companies that are part of today's panel. So I think there'll be more investment opportunities. And I think when you think about it from a historical perspective, it's, the investment in space was typically through the traditional defense contractors, and many of those businesses still today are leading players in the space industry, but they tend to focus on, opportunities working with government agencies. They tend to be larger contracts, and they tend to be slower moving. And today, what we're hearing is that there's a growing roster of high growth companies that are focused on the commercialization of space, presenting great opportunities for investment. They're pure play companies that are innovating in the industry and providing a number of ways to participate in the growth and the commercialization of space. So I think, a few of the topics that I just wanted to touch on was Guillermo made the point that the technology and the entrepreneurs have been there, and now the capital markets are just catching up and reflecting the amount of change that's occurred since, he launched his Space Angels Network. And Chris mentioned there's been a significant amount of innovation, and there's just a large and growing number of startups in the space industry. So I think from an investment perspective, there are a lot more opportunities to come. And one of the things that's driving that, I think, is what Abel touched on, is that there's a large and growing addressable market that makes the commercialization of space so exciting. And anytime there's a large addressable market, we know that investors are going to follow, and whether it's venture investors like Tess or institutional investors or retail investors. So I think that the next logical step in that process is that there will be more public companies, whether it's through IPO or through SPAC mergers. I think that there'll be continued growth in the number of pure play space companies. I think today a lot of the headlines might be focused on space tourism or humans flying in space, but there are a number of ways to invest in the space economy, whether it's satellites and satellite communications or launch providers, data and analytics, the in space transportation and tug. So there's a number of exciting companies that are out there today and more coming. So I think as we look and say, what's the future, what we're expecting, we still think that we're still in the early innings and expect to see more exciting companies come to market, just because two of the hurdles to the commercialization of space has traditionally been just the cost of getting into space and funding the innovation. Those barriers are coming down, they're going away, and with the capital markets being open to these companies, there's significant growth opportunities and the ability to fund those businesses. And I think simply put, a lot's changed since Chris was the lone analyst focused on, Chris Quilty was the lone one focused on space, or Guillermo was launching his angel network, or the two Peters had more hair. So I think a lot has changed. And Brian O'Toole mentioned that there's an important ecosystem that's powering a flywheel effect of growth. And that ecosystem also includes the capital markets. The investment banks have teams that are dedicated to space. They have research teams that are dedicated to covering space stocks. There's a growing number of space-focused ETFs. There's great news outlets like Space News providing insights and news on the growth of the industry. So I think these are all great proof points that it's an exciting time to be investing in the space economy. And I think it's always exciting to have people that are coming to work every day looking for investments, looking for companies to cover, looking for companies to bank, or looking for companies to write about. It means that there's more opportunities from an investment perspective, and hopefully more activity in the market. So I think that the SPAC market has certainly been a key driver of this growth, and I think the SPAC market's evolved, and you're going to continue to see more demand for SPACs. It's a great, as I said, and I think Tess mentioned, it's a great vehicle for companies, well-established companies, as well as emerging growth companies, to access the capital markets in an efficient way and to fund their businesses. I think the other thing that we're seeing is that SPACs are able to access the capital markets. Space companies are able to access the capital markets through a SPAC, and they're driving a lot of the innovation and the disruption from early stage to long established companies. And I think Peter and Brian echoed that this didn't happen overnight. There's a lot of activity that's been going on. It's now getting attention, and now you have the opportunity to invest in it. But there's been a lot of time and effort and a number of years that have gone into a lot of the innovation that people now have the opportunity to invest in. So I think that there's, from a SPAC perspective, the vehicle is providing another platform for this growth and the opportunity to invest in, and the value creation opportunity that's there. So I think the key takeaways that I see from the discussion, is we're definitely going through a commercialization revolution. The capital markets are going through an access democratization with the SPAC vehicle. And the options that are available to companies to go public and access the capital markets are growing. Traditional IPOs, direct listings, and SPACs. These are all great vehicles and tools for space companies and emerging growth companies, as well as established companies, to fund their business and provide opportunities for shareholder wealth creation. So very, very exciting across all of those things. And I think, Chris mentioned that there's a deep roster of emerging companies every year being created in the space industry. And we hopefully see a number of those, disruptive high growth companies focused on this industry coming to market. And as that barrier of, that cost of getting into space and financing it comes down. So in closing, I would just note that the commercialization of space is just in the early innings of its growth. I think that there are more pure play companies innovating in the industry, providing a number of ways for investors to participate in that growth. And so I think that there are a lot of exciting things that are on the horizon within the space industry. And again, I would like to thank all the great panelists for today's discussion and for reinforcing that it's such an exciting time in space, and to be investing into space and space stocks, as well as the SPAC market. So I'll turn it back over to Jeff. And again, thank you all for your participation.
Great. Thanks, Phil, for that great wrap up. Thanks to Jason and the panel for a really enlightening discussion about SPACs in space, and to Guillermo and Chris for opening things up with this webinar. And most importantly, thanks to all of you for tuning in. We had a great turnout for this. If you want to go back and you want to watch this again, you missed something and want to go back and check something, or you want to tell your friends or coworkers about this, we will have the video of this posted on spacenews.com later today. We were broadcasting it on YouTube, so we probably had some people tuning in there as well, besides those of you who are here on Zoom. And again, thank you, all of you, for tuning in, and be sure to stay tuned to Space News as we continue to follow this odyssey of SPACs and space companies, and the progress that we're going to see as almost certainly more of these deals come in the months to come, and the deals that have been announced come to fruition. So again, thank you very much and have a great day.